What would happen if a relatively younger investor invested, say, $50,000 into the SCHD ETF, or maybe the iShares Core Dividend Growth ETF DGRO, or one of the other favorites in the dividend growth community, VYM? In theory, if an investor, especially if they're relatively young, invested $50,000 into any one of these three ETFs and just let the money compound year after year after year, reinvesting those dividends into more shares of any of these ETFs, based upon previous performance, that investor could become very, very wealthy, and that's off of just a single investment of $50K. So in this video, we're going to break down the actual numbers. I'm going to share with you guys what it would look like potentially if an investor invested just $50,000 into any one of these three ETFs, which, like I said, in my personal opinion, are all super high quality. Now, again, this is with a one-time $50,000 investment, never investing another penny after that. Now, these numbers are definitely going to shock you guys, so make sure to stick around until the end. So if you're a long-term dividend investor or want to become one, well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now, before we go through the $50,000 math, when it comes to VYM, when it comes to DGRO, or of course my personal favorite SCHD, just to go through some of the basics on each of these ETFs, sort of compare and contrast them, even though there's a ton of overlap, and even though these three ETFs have a lot of things in common. Now, VYM has an expense ratio of 0.06%, so does SCHD, also 0.06%. DGRO's expense ratio is a bit higher at 0.08%, but again, when it comes to expense ratio, when it comes to how much you're paying to basically have exposure to these ETFs, it's pretty close to free. Now, VYM's product summary says seek to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. Now, DGRO's investment objective says the iShares Core Dividend Growth ETF seeks to track the investment results of an index composed of U.S. equities with a history of consistently growing dividends. Now, even though SCHD's objective says to track as closely as possible before fees and expenses the total return of the Dow Jones U.S. Dividend 100 Index, this index is made up of companies that more or less exhibit a lot of the same things. So again, if you're just curious about all three of these ETFs, if you personally are wondering if as a long-term investment any of these could be a good option, well, in my personal opinion, just based off of their previous performance, which I'm going to show you here in a second, they all would be. Now, speaking of performance, the cumulative performance for VYM, and this is since 2006, is around 370% return, so not bad whatsoever. Now, DGRO's performance on the max time frame is around 215%, and again, these ETFs have been trading for different lengths of time, but again, they have all offered competitive performance amounts. Now, SCHD's performance has been around 13% more or less since inception annualized, which is not bad whatsoever. Now, next, looking into all three of these different ETFs holdings, and this is the most important part about an ETF. What is the ETF actually holding into? An ETF is only as strong as its holdings. Now, for VYM, we have Broadcom making up the most of the portfolio. Then we have JP Morgan, ExxonMobil, we have Walmart, we have Home Depot, we have Procter & Gamble, Johnson & Johnson, AbbVie, Bank of America, and Wells Fargo. Now, DGRO, we have Johnson & Johnson, AbbVie, we have ExxonMobil, we have JP Morgan, we have Apple, we have Broadcom, PG, KO, and Home Depot. Now, SCHD, again, a lot of familiar names here. Did I mention there's a ton of overlap? We have AbbVie, we have Amgen, we have Coca-Cola, we have Bristol-Myers, we have Pfizer, Verizon, Cisco, Chevron, PepsiCo. Now, again, for the most part, all three of these different ETFs hold on to dividend payers. Some of them are going to yield a little bit higher than others, and some of them are also going to offer a ton of dividend growth, and maybe some names not so much. But all three of these different ETFs are very well diversified. But the least diversified out of the three is going to have to be SCHD, which much less holdings, but still quite a few. Now, looking at all their dividend yields, dividend growth, etc., because this is going to be very important when we can calculate what a $50,000 investment could look like. For VYM, we have 2.73% yield off the trailing 12 months. Now, that's a decent amount of dividend yield right off the bat, but the dividend growth for VYM isn't necessarily insane, with around 4 to 6% in dividend growth year after year. Now, with DGRO, we have 2.25% yield trailing 12 months, and then around 5 to 8 to 8.2% dividend growth year after year. Now, SCHD is going to win when it comes to dividends and dividend growth, obviously. 3.6% trailing 12-month dividend yield, and then 12%, 10%, or around 11% dividend growth rate year after year. And that's one of the main reasons that I personally pick SCHD out of the three, is because in my portfolio, I want to hold on to assets, at least in some parts of my portfolio, that are going to pay me more and more in dividend income year after year. And at least based off of historical numbers, SCHD has definitely done so. Now, without wasting any more time, let's get right into it. This is going to be for VYM, a 2.53% initial annual dividend yield, around 6% expected annual dividend amount increase, a $50,000 investment, and again, a $0 contribution from there. Now, dividends are going to be paid out quarterly, DRIP's going to be turned on. And this is for 30 years invested. Now for DGRO, everything is going to be the same, $50,000 invested, $0 contributed, 30 years invested, and the yield for DGRO is going to be 2.25%. For DGRO, we're talking an 8% expected annual dividend amount increase and 9% expected annual share price appreciation. Now lastly, for SCHD, 3.6%, 10% expected annual dividend amount increase, 5% annual share price appreciation, 30 years invested, $50K into the fund. And again, it goes without saying, but all these numbers are just to be estimated, guys. I don't know what's going to happen in the future. This is just based off of previous performance, which does not indicate future performance. But the numbers are in, and for VYM, after a $50,000 investment based off of these numbers, 30 years invested, without another single dollar being contributed, $438,000 after all those years of investing, which is not bad whatsoever based off of a $50,000 initial principal. Now for DGRO, based on these numbers, because of the much higher expected annual dividend amount increase, we're talking $1,052,000. Or an average annual return of around 10.6%. Now lastly, the winner of the three based off of the numbers that we have to go off of, a $50,000 investment into SCHD based off of the previous performance-ish numbers. We're talking 1.4 million after 30 years, or around an 11.69% average annual return, which is pretty close to what we've seen. So out of the three ETFs, SCHD, of course, DGRO, and VYM, just based off of the previous performance, it seems like unless something changes, SCHD could be the winner out of those three. But actually, funny enough, if we were to backtest all three of these ETFs and look at their performance since inception, DGRO has actually outperformed both SCHD and VYM, although SCHD and DGRO are much closer. So now that we talked about what a $50,000 initial investment long-term into VYM, DGRO, and of course my personal favorite SCHD would look like, I lastly most importantly want to hear from you guys down below. If I were to ask you to only pick one, either SCHD, DGRO, or VYM, which ETF would you hold on to for the long term? Let me know in the comments down below. If you enjoyed this video, make sure to please drop a like in it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.